You think gold is expensive? That's not the real story. Gold prices have shattered records, crossing $4,000 an ounce. But here's what's really happening behind the scenes. The world's wealthiest people aren't just buying more gold, they're secretly moving where they store it. For decades, places like London and Geneva dominated gold storage, but now there's a new destination attracting billionaires, entrepreneurs, and family offices from around the world: Singapore. And honestly, once you see why, it starts making a lot of sense. Hidden near Singapore's Changi Airport is one of the most secure private vaults on Earth. From the outside, it looks like an ordinary warehouse, nothing flashy. But inside, it's a fortress built to protect billions of dollars worth of precious metals. The security doesn't start with the vault. It starts with the country itself. Singapore has built a global reputation for political stability, strong laws, and financial trust. Unlike many nations facing geopolitical tensions, Singapore has stayed neutral for decades, making it one of the safest places to protect wealth over the long term. That's exactly why investors are choosing it. According to the founder of the Reserve, wealthy clients aren't thinking about next year. They're thinking about the next 20, 30, even 40 years. They're asking one question: where will my family's wealth be safest for generations? Their answer is increasingly Singapore. Most of these clients come from the United States, Europe, and Australia. Many are entrepreneurs who built successful companies and now want complete control over their wealth instead of relying entirely on financial institutions. To meet this growing demand, the Reserve built a state-of-the-art vault facility that opened in 2024, and this place is absolutely insane. It contains a massive silver vault capable of storing 10,000 tons of silver, worth around $16 billion. Think about that weight for a second. The foundation extends 32 meters underground, and the floor is engineered to support 90 kilonewtons per square meter, roughly 45 times stronger than a typical parking garage. Why? Because storing thousands of tons of precious metals isn't something ordinary buildings can handle. At the same time, gold and silver prices have continued climbing to record highs, increasing demand for secure storage around the world. Now here's where things get even more interesting. Silver takes up a lot of space. Gold doesn't. Gold packs enormous value into a tiny physical size, which makes it much easier to transport, but also much more attractive to thieves. That's why gold requires an entirely different level of protection. Forget Hollywood movies like Ocean's 11. Real vault security isn't dramatic. It's all about layers. Professional vaults follow strict standards, including what's known as the UL Class II Gold Vault rating. The goal isn't to create an impossible vault. The goal is to delay any attacker long enough for security teams and authorities to respond. Time is the real security system. Inside the gold vault, everything is organized using secure compartments that resemble giant safe deposit boxes. This design makes every customer's gold easy to identify, access, and retrieve whenever needed. The facility can store up to 500 tons of gold. At today's prices, that's worth roughly $64 billion. To put that into perspective, that's around 40,000 good delivery bars, the global standard used by central banks and major bullion traders. Each bar weighs about 400 troy ounces, and each one is worth approximately $1.6 million. Of course, not all gold bars are created equal to $1.6 million. Of course, not every investor buys bars that large. Many prefer smaller bars, weighing around 32 troy ounces, making them easier to transport, divide, or pass on to family members. But the biggest shift isn't about the size of the bars, it's about trust. Around the world, political uncertainty, trade disputes, inflation concerns, and government debt are making investors rethink where they keep their assets. Many clients are no longer comfortable storing all of their wealth inside a single country. They're spreading it across multiple jurisdictions. One reason is the growing concern about the long-term stability of major currencies. Some investors believe that if confidence in paper currencies weakens significantly in the future, gold could once again become one of the world's most trusted stores of value. Whether that happens or not, they don't want all their gold sitting in one place. That's why more Americans are opening vault accounts overseas. But there's another reason physical gold continues attracting investors. It's called counterparty risk. Imagine lending money to someone. As long as that person stays financially healthy, everything is fine. But if they fail, your money could disappear. Financial investments often carry that same risk. You may own shares, funds, or financial contracts. But ultimately, you're relying on banks, brokers, or institutions to honor those promises. The 2008 financial crisis reminded the world that even the biggest financial institutions can fail unexpectedly. During those months, investors didn't know which bank would collapse next. When trust disappears, numbers displayed on a computer screen suddenly don't feel as reassuring. A physical gold bar is different. It's tangible. You own it directly. No intermediary, no promise, no counterparty standing between you and your asset. That's one of the biggest reasons wealthy investors continue buying physical gold despite all the digital investment options available today. Right now, London still dominates global gold trading, with well over $100 billion worth of gold changing hands every single day. Compared to that, Singapore remains a relatively small player, but many industry experts believe that won't stay true forever. As global wealth shifts toward Asia and investors continue searching for politically stable locations to protect their assets, cities like Singapore, Hong Kong, and Dubai are rapidly positioning themselves as the next generation of global precious metals hubs. Because in today's uncertain world, owning gold is only half the equation. The other half is deciding where to keep it.